Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking for a double 1-2 for higher prices to come. In this scenario, we're now looking for this wave 3 to finish before we then get a bigger corrective structure in a wave 4. And if we look at the targets of a wave 3, then usually the minimum target is the 1.618, which has been tagged over here, small little range, but the moment you pass the 1.618, the next area of interest is the 2.618. Well, we've basically been ranging on top of the 2.618, and then the next target is the 3.618 sitting at 36k, and it's an area that we were looking for anyway for a while already, also because of the additional resistance that we have over here, which is the blue box between 35.9 and 36.2k. What is also interesting is that we made a new high on lower volume, higher high on price, lower high on volume, which means that we can potentially start looking for the end of a wave 3 for then a corrective structure in a wave 4. If we then look at the targets of a wave 4, most commonly price retraces between the 302 and the 05, but also the 0.236 is a target for a wave 4, which is sitting at 33.8k, with the 302 and the 05 sitting at 32.4k and 31.3k respectively. If price moves to the downside more impulsively and reaches the 0.618, which you can see over here, these fips by the way pulled from the low to the high we have at the moment, then a wave 4 is invalidated and we have to look for lower prices to come. However, in this particular scenario, we're looking for the high of 3, then a bounce in a wave 4, which then has to be a 3-wave corrective structure. It can be complex, flat, zigzag, anything, before then continuation of the trend towards the upside, looking for the blue 5, which then finishes green 3, for then a green 4 and 5 still to come. If we look at the bearish scenario on the medium time frame, we're looking for a 3-wave structure in an ABC. In this particular scenario, wave A is then an expanding structure, an expanding diagonal, which is rare, never really preferred. Wave B retraced to the 0.382, which is a common target for a wave B. And then we're waiting for wave C to end in a 5-wave structure. 1, 2, 3, 4, 5. Finishing 5 around the 1.618 would be nice, which is still a target for wave C, sitting at 36.3k, for then a move towards the downside. And that is then also the big difference between this bearish scenario and the bullish scenario I just showed. In the bearish scenario, you want to hit the invalidation and you want to see an impulse to the downside. 1, 2, 3, 4, 5, lower prices to come into the lower 20s. While in the bullish scenario, you're looking for a corrective structure to the downside and not hitting this level over here at 30.1k. If we then zoom in to the local range that we have over here, then this is the bearish scenario at the moment. It's a flat structure or a WXY, and then a 3-wave A or W, 3-wave B or X, and then we're looking for a move down in either wave C or a wave Y. When we think about a flat being a 3-3 and then a 5-wave structure, the most common target for wave B is between the 1.38 and the 1.236, taken from the high to the low of wave A, which is where price is now, and also for a wave X that is moving above the high of wave W, this is the most common target. So it's currently very, very nicely respected indeed. The 1.618 just above is a less common target for B and X, but still a target nonetheless. In this scenario, you then expect price moving towards the downside in a C or Y, and preferably we're then also going to see bearish CVD divergences building here locally. So that is definitely something I'm keeping my eye on. However, when we look at this scenario, you've probably also read this box over here. This being a potential ABC running flat, which is not common, so that's something we have to keep in mind. And this wave A is a bit sketchy because an expanding diagonal doesn't really work because 3 is shorter than 1, but also in a contracting diagonal, wave 4 over here is too deep. So counting this move to the upside as an impulsive structure, either of course a regular impulse, but that's not the case, wave 1 and 4 are not allowed to overlap, but also diagonals do not really work over here. So that is why I'm not a big fan of this blue wave A over here, but we always need a bearish scenario, B or X, and then a move to the downside, and counting all of this, which was quite intense, of course, looking at how this structure formed, all the little details, we park them on the side. We just observe the local price action, and based on what we see locally, including CVD divergences, we can estimate the probabilities of potentially continuation to the downside. But at the moment, based on A and also a running flat, it's not yet a preferred scenario. However, moving to the downside can be interesting because you can only imagine how many people are buying, and they are sitting in profit. They are moving their stop losses to the upside, and then what happens? We create some very, very interesting lows. We have a double bottom here. We have a double bottom here. We have a double bottom here. And of course, we also have a bit of a gap, 1 hour gap over here, which is always interesting. So, eventually having a bit of a strong move to the downside, hitting all those stop losses, I think it would be healthy for the market as well to have a bit of a retracement. But of course, we first have to look for signs of weakness locally. The bullish scenario is, well, quite self-speaking, I suppose. It just moves to the upside, 1, 2, 3, 4, eventually looking for the end of a wave 1. Then we're looking for 2 and continuation. The end of this wave 1 could potentially already be in, where this is then 1, 2, 3, 4, 5 over here, but preferably we still make another high, 1, 2, 3, 4, 5, for example. So yeah, and then 1, 2, continuation. Invalidation is if price moves below this level, 34K. If we then zoom in to the micro levels over here, the micro scenario, again 1, 2, 3, 4, 5, but now currently looking for a wave 4 in this particular scenario, where price bounced on the key level, very, very nicely respected. It's the high of this gap on the 30-minute as well. And as mentioned, the gap is important because the moment price comes back down and starts to close candles over here, probabilities are very high you're going to fill this gap, reach the invalidation for a potential wave 4, which increases probabilities of potentially more downside as well. So this is something to at least keep an eye on. And this is of course the bullish scenario where we're still looking for a move to the upside, but in a bearish scenario you're going to hit that invalidation and we might be looking for either an A, B, C to the downside or more impulsive in a 1, 2 and continuation. An ABC, well, after an ABC you expect continuation to the upside in a 1, 2 and then a wave 3. You expect a bigger move to the downside in a wave 3, volume increasing, impulsivity increasing as well, more parabolic, a strong move filling the gap as well, where then we're going to be looking for much lower targets on Bitcoin, of course. Now, the most common target for wave 2 is the 0.5 to the 786, which currently we did not yet touch. The 0.382 has been hit, taken from the high to the low of this potential wave 1. So preferably for a wave 2, we're still finding a bit more upside to reach the common target area. For a wave B, however, in an ABC, the 382 is a common target. So that is something we do also have to keep in mind. Now, this is the gap in a little bit more detail. Let me go to the 30-min. So 2 wicks, perfectly fine. Again, the moment you close candles here, more bearish scenarios increase in probability. So keep an eye on these gaps. One of the lines is taken from this low and the other one is sitting on this order block over here. If we then look at the CVD divergences locally, we have a bullish and a bearish CVD divergence. The bearish CVD divergence is with an order block over here, lower high on price, higher high on the CVD. The bullish CVD divergence is on the right side of the most recent low, and actually it's with that low over here. So we have a higher low in price, lower low on the CVD. Now, because the bullish CVD divergence is on the right side of the most recent higher low, which in this case is the most recent low, these at the moment have a higher probability of playing out, meaning taking this high. However, we cannot forget about the bearish CVD divergence. There is some absorption going on, and if price would take these highs and the bullish one plays out, we might still have the bearish CVD divergence as well. Now, what I'm looking for here, lower high on price, but look at yellow. If you go to the green pivot over here, the green candle, and you move to the downside, look at the horizontal line of my cursor on the right side, you can see yellow is a lot higher than my horizontal cursor line, bearish CVD divergence over here, but also we have bullish CVD divergence, higher low in price, lower low in blue, lower low on yellow. So it's a bit of a mix more locally. What goes against the bullish CVD divergence, however, is that the bearish CVD divergence appeared first. So when price was moving up, we first got the bearish CVD, and once it came down, that's when the bullish CVD started to occur. So there's something to say for both of these. It's a bit of a mix at the moment, and I prefer to be patient and see which ones plays out and which one gets invalidated. If we then look at the probabilities of the different scenarios, then at the moment on this local time frame, which is at the moment by far most important, looking at the count, looking at the structures, looking at currently the gap being respected, the probabilities are higher for another high. However, the moment price gets accepted in this gap and we start closing candles inside over here, 15-30 minute candles, bearish CVD divergence, right? Something we have to keep in mind as well. Then the probabilities will switch to the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.